What's going on, y'all? Welcome to another episode of the Friday wrap up with yours truly, Kevin Weemark, aka the Mortgage Mouth. And yes, please jump over there on YouTube and give a subscription so you do not miss a beat. Wow. What a week. I mean, I can't recall the last time I saw a week like this. Other than, right, yeah, I mean, you talk about the pandemic, but I mean, from a standpoint of an administration and policy where we just plummeted. I mean, obviously we had the recession back in 2008 and 2009, the housing crash. I mean, that was wild as well. But I mean, something like this hasn't come along in a while from an administrative perspective. I mean, from the moment that Trump came out with that easel board, it was like, what is it? What are we back in, like high school, grade school? Like, what is going on right now? Do I got to get up there and am I going to have to write? Like, I won't yell out loud in class. Like, but I mean, when you see 80% reciprocal tariffs, you're like, holy shit. Anyway, once that came out, all chaos broke loose. And as the week progressed, it got worse, right? The Dow just got hammered. I think I saw it lost $6 trillion in wealth. And that's something to really note. That's called quicksand. When you have buyers, people in the marketplace, just general consumers that see something like that, the carnage that's out there, it is going to create some hesitation. Now, on the flip side, the positive that we saw, it looks like the labor market is doing well. There was a major concern that with all the government layoffs, that the labor market was really going to pull back, right? But it looks like the private sector is really picking up. We had non-farm payrolls come out this week. You had JOLTS, initial jobless claims, but the big one on Friday blew away forecast. So the biggest beneficiary right now is just all the uncertainty, which is just pushing rates down as traders pull money out of the market and just dump it into treasuries. To the point where we're at the lowest that we've seen since October of last year. The 10-year treasury actually got down to about 3.86, only to see it go all the way back up to 4%. And I'll tell you why it did it. I haven't really seen it anywhere else, but Fed Chairman Powell spoke yesterday afternoon. And whether it was a market correction of, hey, we're overstepping, the bottom really should be 4%, I'm sure that had a lot to do with it as traders try to figure out, hey, how low can this really go, to where we just have to kind of wait and see, so to speak. We've corrected. We don't want to overcorrect. So I'm sure there was some pullback from that. But you had Fed Chairman Powell come out and say that inflation is now likely to go up. And I just question why the Fed has to come out and say anything. They're out of levers that they can pull. They've put us in this box, right? We're here with hyperinflation during the past administration due to the policies that they implemented, leaving the Fed fund rate near 0% for way past the pandemic. So they created the monster, right? They flooded the system with money, manipulated the currency, and now they've had 2 years to correct it. Couldn't get it down to the 2% level they wanted within those 2 years when they started changing the Fed funds rate. And now they're going to sit when inflation's at 2.8% and the unknown is tariffs and say it's likely to go up. I don't understand the rhetoric. I don't understand why they have to say something. We're getting a rally with interest rates right now. Housing needs the recovery. And for the Fed chairman to come out and get a little bit political once again, in my opinion, at this time, look, just sit back and let the law of economics play out. And let me explain what I mean by that. What's going to happen is the following. The slowdown of the economy, traders are believing that, okay, we need to get out of the stock market because we're not going to be able to make money there as the correction is happening. But we're not overly concerned with inflation, although we are concerned about it. But if you have a slowing economy, you're going to have consumers that sit on the sidelines. You're going to have a contraction of spending. You're going to create an oversupply, and then that's going to decrease prices. Much like a housing market, which a lot of people are saying right now, that has the potential of happening. You're seeing a huge influx of inventory, right? It's the spring season, so you're seeing a lot of sellers come to the market. But are the buyers' appetite, even given the low interest rates, right, which are now down in the lower to mid sixes? And the other thing I want to note is ARMs are on the rebound. That is something to note. So as you're talking to your potential buyers this weekend or anybody like that, if you're interested to know the difference, they're running anywhere from about a quarter to a half a point different lower than a fixed rate. And what we're seeing now is, going back, is we're seeing a huge influx of inventory. But is there an appetite from the buy side? So what a lot of economists and a lot of experts believe is we're going to have such an influx, the uncertainty, and now the $6 trillion and this bloodshed in the market, as far as the stock market, is going to cause a lot of buyers to sit on the sidelines with their concern of their money, their cash flow, potentially their job. And what that's going to do, it's going to cause prices to come down. So it's the same concept for the overall economy. And that's where a lot of traders are saying, hey, in the short term, we have a big concern, but possibly the long-term outlook doesn't look so bad. So we're going to have to just kind of get through this. So my biggest 2 cents is, and I'm going to put out a little bit more information on this, is I think this quarter has the potential to be the lowest interest rates we will see this year. I just think this whole chaos of the tariffs, where the Fed is sitting, I'm a firm believer. I think the Fed only has one cut this year. I don't think that's going to do much to change interest rates. Treasuries, the uncertainty, the flood into the safe haven is what is driving interest rates right now. So if you're a buyer and you feel comfortable with job security and the down payment, you got it saved and so on and so forth, now may be a great time to jump on that. All right, y'all, if you need anything, I'm around. You need a flyer, you want to talk about ARMs, you need a pre-approval, whatever the case may be, please do not hesitate to give me a call, text, or email. And once again, please do not hesitate to subscribe to that YouTube channel. Be greatly appreciated. All right, y'all, have a great weekend. Happy selling, and I'll be coming to you on Monday with the wrap up. See ya.